Hi, I'm Brittany, and this is Hanging with Home Experts. I'm here with Stephen at Integrity First Mortgage. Hi, Stephen.
Hey, Brittany.
All right, so today we are going to talk about the mortgage process. One of the most crucial parts of the home buying process. First things first, you are actually a mortgage broker rather than a
Correct.
direct lender.
Right.
Okay, so tell me what the difference is between those.
The difference between a direct lender and a mortgage broker is going to be, your banks or mortgage companies are going to be your direct lender. They have one investor or maybe two investors. They have a limited amount of products and the types of loans that are available. We're a broker. We're contracted with over 20 different lenders. So we can really look at each lender, what they have to offer, and make that fit to a specific buyer so we can really tailor what they're getting in their mortgage to their specific needs.
Because different lenders have different requirements too, right?
That's right. So some lenders have their own overlays and they may say they want something that another lender doesn't require for a certain loan.
Okay. So what are the most common types of loans?
Generally, your most common types of loans are going to be a conventional loan, FHA loans, VA loans, and sometimes you'll look at like a USDA loan that might be out in the country or somewhere with a less dense population.
Okay. Now, there are different requirements for different loan types. I think VA, USDA, those are kind of unique in their own sense, but also most people know, what the difference is there,
Right.
right? So what about the conventional versus FHA? What are some of the main differences?
So, an FHA loan and a USDA loan and a VA loan, those are loans that are backed by the government. And there's very set requirements the government puts in place, where a conventional loan is a little bit more lenient, and a specific investor can put their own set of requirements on it that meet a general guideline that Fannie Mae or Freddie Mac puts out.
When a buyer is looking to finance, one of the big things that comes up is credit score. I feel like we get
Yeah.
this question a lot. You probably get this question a lot. Maybe one of the most common questions is, what kind of credit score do I have to have in order to qualify for a mortgage?
So you're going to hear a range of credit scores, and that can be taken in a number of different ways. So obviously, the better your credit score, the better the terms are going to be that are offered to you on a loan. Credit scores, I would say, generally you need at least a 620 to be able to get a loan. But there are programs that go to as low as 580. Now those come with other additional requirements that are specific to that particular lender.
Now, the next big thing I think people talk about is that the money down, the down payment. Okay, so there are still programs out there where you can put 0% down, or are we not really seeing that anymore?
There are like a DA loan or USDA loan, you can put 0% down. There's a lot of different down payment assistance programs out there that either the state has, some municipalities will offer their own type of assistance. And then there are things specific to lenders. We have some that offer grants that really reduce the amount of money you have to bring for your down payment and make it a lot easier to get into the market for people.
Okay, and then where does closing costs fit into that? Are there any programs that help with closing costs?
So there are programs that will pay for X amount of your closing costs or a certain percentage. You can always, with a good realtor like yourself, negotiate for the seller to pay those. And we're starting to see that a lot more in this market where it's becoming more buyer friendly.
Okay, so that's all the technical stuff, I feel like. Well, there's a lot of technical stuff
Yeah.
associated with that. But what does the process look like? So let's say I'm a buyer and I come to you like, you know what? I think I'm ready. I want to be a first time home buyer. So here we go. I'm a first time home buyer and I am ready to buy a new house. What's your next step?
I would always encourage every buyer, they may already have a relationship with a real estate agent, but I usually encourage buyers to talk to a mortgage professional first before you start looking at homes. Find out exactly what you can be pre-approved for, find out what you can afford, what you're comfortable with on payment, and then start looking, because nobody wants to see houses they love and then they find out they can't afford it. And
Yeah.
they're like, oh, they're brokenhearted and nothing matches
Yep.
up to what they've seen. So, getting that dialed into what can I afford? What am I comfortable with? Getting a pre-approval letter from your real estate agent or from your loan officer to give to your real estate agent. Then when you look at houses, you're ready to move. And right now, being able to move quickly on offers is pretty important. But I think that pre-approval is your first step.
Okay, so you touched on something so key, and right now we're seeing this a lot in this market, but where maybe our buyers can be approved for a certain amount, but then when you dial down and you tell them, okay, so you're approved for 350,000. This is what the payment looks like for 350, and they're like, whoa, no, I cannot. I don't want that, right?
Yeah.
So knowing those two things are super key. It's not just about what you can be approved for.
Everybody has an idea of what they can be approved for, and yeah, that's great. But then absolutely, they see the payment, they're like, well, maybe I don't want to spend that. So that is the benefit of having those conversations up front.
Yeah. Okay. So then we found a house. We're going to put an offer on the house. The real estate agent submits the pre-approval. Now what happens behind the scenes?
So once you submit your application to me, generally you're going to give me your financial documents like pay stubs, W-2s, or tax returns if those are required. We're going to verify that all of that is correct. Make sure you can actually afford what we were giving you the pre-approval for. When we get you the pre-approval letter, we get it to your agent. You put an offer in, then you're going to take over in that situation where negotiations and exactly what you're going to get this house for and what the payment's going to look like. And then from there, once your inspections are done and I talk to you and say, hey, Brittany, everything looks good, you give me the okay, then we're going to look at what ordering an appraisal.
Okay, so the lender, the broker in your case, you will order the appraisal.
Right.
So we've gone back and forth on this. There are different scenarios when it comes to the appraisal, right? So it can come in at appraised or, at offer price, right? It can come in under, and in under, what does that look like? You have to make up that gap, right?
Right. So, a lender, if the house appraises for 300 and your loan amount set up at 320, no lender's going to give you money for something that doesn't meet the value. So you either go back to the table and negotiate with the seller. If that's not possible and you still want the house, you have to bring that difference to the table.
And then obviously if it's above, then you're winning.
You have built-in equity.
You are winning.
Right.
So, okay, perfect. All right, so we're past all of that. We're getting ready to close. There are a couple things that happen around closing time, right? With some disclosures, and we have to wait a certain amount of time.
Right. So you'll get initial closing disclosures that give you a pretty broad look at what you're going to have to bring to closing as far as cash to close. And it'll break down every fee that's been in there, the appraisal fee, title fees, what's going into an escrow account. And then from there, once you sign that starts a mandatory 3-day waiting period until you can close. So you have to wait 3 business days from the time you sign that to when you can close. Now, between then, we're going to get you a final closing disclosure that tells you exactly what you owe at closing. So you can either go to the bank to get a check or you can wire the money.
Okay, one other thing I want to touch on is escrow.
Escrow is a good one.
Escrow accounts, right? So there is a lot of confusion around that. What is that? Yeah.
So your escrow account is just a portion of your escrow payment is a portion of your payment. So every month you make your payment. That's principal and interest money. That's your taxes and your insurance. That little bit goes into a bank account that's separate from your mortgage. And as long as you have that mortgage, your taxes and insurance are paid automatically from that account. So you don't ever have to worry about that. But when we do close the loan, there has to be enough money in there. So when your taxes and insurance come due, that we can make that payment for you.
I mean, how I view that is almost like a little bit of protection for the homeowner, but obviously it's a protection from the lend or for the lender, because they want to make sure that you're not going to have tax liens because you didn't
Right.
pay your property tax, and they want to make sure that the house is insured so they're covered if something happened to it. And as a consumer, I would want to make sure of the same things.
Right.
So, but I think it's so important, like the escrow piece is, because property taxes change, because our insurance changes, that payment after year one,
It could change.
it could change a little bit, right?
Right.
Yeah.
Yep.
So I always like to tell my buyers, especially my first time buyers who aren't super familiar with that, like just be prepared. You could get
Especially on a new bill,
Yeah.
that can change. So, it's just part of the conversation. We want to make sure people understand. And if anybody ever has questions, they can always call their lender and they can quickly figure out why that payment went up. Did you make changes to your insurance? Maybe taxes went up. That's generally the thing that affects it, is taxes went up.
And we've had that a lot here in Kansas City.
Right.
So a lot of our homeowners are going to see that. Escrow, is it required that you do that, or can you direct pay insurance and property tax?
So some loan types, like FHA, will require an escrow account. Some loan types, like conventional, will allow you to waive that escrow if you want. So you can opt to do that on some loan types.
Okay, interesting. All right. Well, okay, that's all for today. That was a lot of information, but this is so important. This is such a crucial process for home buyers. So thank you so much.
It was my pleasure.
If you're looking to buy a home, please reach out to me, reach out to Steven. I'll have his contact information in the caption of the video. And yeah. All right. Thanks so much.
Thanks, Brittany.